Our next guest says that those fighting the Treasury Department's buyback program will soon find out there's only one bond vigilante out there that matters, and that is Secretary Bessent himself. Joining us now is Jefferies Chief Market Strategist David Zervos. David, it's good to have you. It sounds like you're pushing back against some of the Wall Street research, economists and bond strategists and everybody who says this is a Band-Aid that won't work.
I am. I think it's actually quite shocking to see how so many of my competitors and colleagues are negative on this. I think it's a tactical move that we've seen conducted many times in the past. These are basically operation twists, and they've been hugely successful when the Fed has initiated them. They're somewhat more unusual when the Treasury initiates them. But I don't see how you could fight this when the firepower and the cards are all sitting in the Treasury Department. So we'll see. There could be some fights for a little while, but I'm not expecting the traditional bond vigilantes to win any battles here.
I mean, the premise that it's been liquidity in this part of the market, the 30-year, it's August. I mean, do you buy that? Do you think that that's what's really going on here?
I think there's some of that. I wouldn't say that that's the large part. The issuance is certainly a big deal. We have incredible amounts of IG issuance, so there is some crowding out. But we are at the top end of the range. It is a tight range, Sarah. We have been in this range for almost 2 years, 390 to 480, one of the tightest ranges for an almost 2-year period that we've seen since the mid-2000s and the Great Moderation. So it's just the top of the range. I think people are getting a little hot and bothered with the 40 trillion deficit numbers and throwing out the fact that there's more spending coming, particularly vis-a-vis the war. So this was an opportune moment to kind of put a little bit of a kibosh on the potential for a runaway through the top end of that range.
A lot's being written, David, about his credibility when it comes to his hopes, at least coming into the job, on the budget deficit, on oil production, clearly on GDP. Do you think that 333 is really 0 for 3?
I don't. I think, as the Secretary said yesterday, we had a pretty sizable drop in 2025. We have this war to contend with and the tariff sort of shakedown back and forth, and we'll see how that comes out in 26. But I think the trajectory is still there. I think the growth numbers, as the Atlanta Fed points out, look like they're pointing back up. And the trend in the deficit to GDP, particularly because the denominator more than the numerator. And let's see what they can come up with. He said there's a big push with him and the OMB director to do some serious spending cuts. Those are hard to get through, but I'm optimistic. And again, look, I want to go back, Carl, and repeat what I said before. Everybody's running around with all these scare scenarios on debt and interest rates and things moving, in an out of control, non-credible way. This is one of the tightest ranges in 10-year treasuries that we have seen in so far in the administration since the election in over 20 years. So it's just not really true. It's not running away from anybody.